Hey now, so we're gonna do something a little different because you can notice the background behind me is different. There's no autographs behind me, and that's because I'm in my office. We just moved in here, but it doesn't matter. Let's talk taxes because usually I do a video with Bench Clear, but I haven't heard from them this year. So I think it's really important to talk about because a lot's changed between 2021, 2022, and 2023. So you can watch Bench Clear for the old ones, but let's talk taxes for 2023. Now, everyone knows that they should be expecting in 2023 a 1099 from any third-party app, with the exception possibly of Zelle. Zelle is fighting this tooth and nail not to issue 1099s. And if you sent money to friends and family, you don't have to worry about it. But if you sold anything on eBay, you got paid via anything via PayPal, Venmo, Cash App, anything third party, and it's more than $600, you're going to get a 1099. And the reason for this is the government, as everyone knows, and you can argue is what's causing all this inflation now, is the government put out literally trillions of dollars in the last few years into the population. And so the money's out there, and now they want to get it back. And the government decided, for better or worse, that the best way they're going to get it back is by, well, at least one of the best ways, let's do these 1099s. So a lot of these corporations now are going to get these 1099s and they have to report them. So theoretically, nothing changed. They were supposed to send out anytime you pay a business or you receive money for doing a service or selling something, you're supposed to declare it on your taxes. And the only way really the government knows that is if someone files like a W-2, a 1099. If there's no 1099, they're not going to know this at all. They have no idea that this money was interchanged. So now, that used to be, generally, there were a few exceptions, but generally, it used to be $20,000 or 200 transactions would trigger that 1099. Now it's triggered down to the $600. And we've talked about this. Everyone knew this was happening. The auction houses originally said they weren't going to issue 1099s if you sold through them. I've heard that's all changed. That was just all speculation at the time. So expect them through the auction houses, through anything, that if you got paid for selling something more than $600 or possibly even less, you're going to get 1099'd. So now the question becomes what to do. How do I declare that? And again, I've talked about this before. The treating of the 1099 is no different this year than it was last year, than it was the year before. There's really the three options. There's on part one is other income. You can declare it and you're going to pay a pretty steep tax on that. There's part two, you put it as revenue on your Schedule C, which gives you the opportunity to do business deductions from that. And then there's part three, which is treating it as an investment. And you can watch the previous videos or you can email me. I'm happy to talk about what the difference is. The difference now is, whereas last year, a lot of people were in the business of selling sports cards, I'm getting a lot of my clients coming back to me and saying, you know what? I want to get out. The market's down. I got caught in the hype. I want to get out. What do I do? Schedule C, Schedule D, I don't know. And the short answer is this, my opinion, this is just my opinion, not my firm's opinion. If you filed a Schedule C previously and you're still holding some inventory with the intent to get out, I would avoid the Schedule D and do the Schedule C. And the reason is that one of the worst things you can do is have short-term gains on Schedule D. They are taxed very high with money coming in and out. So if you did a business before, you could continue still running that business, even though you may not intend to run that much further. It's my personal opinion to keep the business going. That way, when you go to file, the government, it shouldn't set off too many bells and whistles. You filed like a Schedule C before. I haven't heard from any of my clients that they got notices from IRS regarding an audit. Now, granted, they have a few years to do that, but haven't heard anything. So no news is good news in this case. So I don't see the problem with continuing to do it. Now, if you already sold your inventory and you're out, you really can't file a Schedule C. There's no real basis because you're out. You don't have a business anymore. And then you move to the Schedule D. And this really was an investment. You may still have to file Schedule C for other reasons. You're going to have to contact me for that. There's some legal reasons. But, just take a good hard look and think through yourself. Like, do I really plan on doing this long term? And long term is not forever. Long term is, let's say, 3 to 5 years. And a lot of people are still, yes, I'm not getting out. I have fun doing it. I'm making still some decent money. I'm not making the money I made last year, but I'm still making some money, or you know what, I'm sitting on inventory, but on these players, but I think they're going to be really good. I'm going to keep buying and selling and sitting on this inventory, hope that it bubbles up. You can still do that, even though it technically sounds like an investment to me, which should fall in Schedule D, but you can still hold it in Schedule C. Keep it in your inventory, obviously. Technically, all your inventory should be for sale. Granted, you may not sell it because you're not getting the price you hope for, but technically it's still for sale. If someone came along with the right amount, you would sell it. That's what inventory is. I mean, the inventory doesn't have to be priced fairly necessarily. Just inventory means it's items that are for sale. So long as it's for sale at a price, it's inventory. It could stay on the Schedule C. You don't have to worry about the Schedule D. So that's what's going on. That's what I see though. A lot of people just getting out. The market is, it's funny, the market never goes down. They call it a correction. It's never going down, it's just correcting itself. I always thought that was a bunch of BS. It is going down. I don't know if it's going down. I'm not a stock investor. I'm an accountant. I'm a tax guy. I help you. I want to help you. So as always, my email is in the comment section. Feel free to reach out to me. This is just a real quick how I see it. Now, a couple other things I want to get into. It's November 23rd right now. Tomorrow's Thanksgiving. So you have an option. You still have one more month to consider tax planning. So if you're running at a profit right now for the year, you can invest in your company. This is a good time to invest in your company, number one, and use some of that to offset your profits. And it's not one for one. It's not for, let's say you have $100,000 gains for the year. It's not exactly if you spend $100,000, let's say on inventory or supplies or anything like that. You don't have to pay $100,000. You don't have to pay $100,000. You'll have a zero net income. It's about a third, let's say you put. I mean, it varies obviously by state and everything. A couple other factors, how much other money. But you can figure maybe a third to be conservative, maybe a little less. The money that you spend on yourself, you won't have to pay to the government in taxes. Something else to consider, again, that's assuming you're making money this year, and you're sitting on some bad cars. And let's just take Fernando Tatis for an example. Obviously, Tatis got busted for drugs. His card values, I think, it plummeted. I haven't really checked, but let's say you're sitting on a lot of Tatis and you paid a lot for that. So the basis in it is pretty high. Your entry point is high. And you're saying to yourself, you know what, Tatis is done. And I'm not gonna make my money back in this cards and I have a profit. You can sort of, we'll call it manipulate your revenue. You could sell those cards or even like for a penny and basically offset the gains with the losses. And that is a one-for-one offset basically. So if you sell your inventory high, if you bought your inventory high and you sell it low, you can offset that with your gains. So obviously your net income is gonna diminish for the year. So again, let's say you made $10,000, but you bought a $10,000 Tatis. And it could be anyone you think is going to be a loss leader. I'm not going to tell you who that is. I'm just picking Tatis because of the news. And you sell that card and you sell it for a loss. You can offset that gain and loss. It does work that way, which is nice. A couple other things to consider right now. Let's say you're getting this is mostly if you're sitting on profit for the year and you're doing a Schedule C. I mean, if you're doing the Schedule D or I had one person who wanted to put it on page one because they slept better at night, and that's fine. It's up to you. But if you're doing this on the Schedule C and you're sitting on a profit of a couple of thousand, you may want to get into breaks. Now, why would you get into breaks now? I'll tell you why. Again, the breaks have to be done by December 31st. But getting into breaks, what's good about that is, okay, what are you going to do? You're either A, going to increase your inventory because you get a good card, a high dollar value. And the higher the inventory you have at the end of the year, the less taxes you're going to pay, which is, I know that sounds weird, but it's true. It's kind of a mixed signal how to get to your cost of goods sold formula. And you can watch some older videos on how to get to cost of goods sold. It would help explain that. So you can do it that way to get to increase your inventory. Or if you have a bad hit, that still goes into your inventory and the sales of it is zero. I know it's confusing, but it's almost like spending money on supplies. It's spending money on inventory. Again, it's not a one-for-one thing. But again, I'd rather spend money on, and I think breaks are like a lottery ticket. I'd rather spend money on a lottery ticket than give it to the government. Just remember, it's not one-for-one. It's not like, oh, I have $10,000 profit. I'm gonna spend $10,000 in breaks. And even if I hit nothing, I'm gonna have not pay any income taxes. It doesn't work that way, but it helps. You can do it. I have one client last year that had a very good year, and so at the end of the year, he invested a lot in like materials and supplies, and he's probably going gangbusters if he's watching this. So I'm here for you. That's the key question. My email address, as always, is at the bottom. If you have questions, email me. I don't charge much. Usually I just charge a subscription to my channel, this one you're watching right now. If you're not subscribed, just hit the subscribe button. I do check it now. But other than that, I don't charge anything. If it gets complex, I mean, we do sit down. I do charge $2.10 an hour for complex tax matters. We even do tax returns and we do a lot of that. That's why I got a lot of clients last year. This gets very complicated. I sit down with you. I walk through the steps with you. I'm not gonna lie, it could be about $1,200. It could be more depending on the states. Some states like California and the Northeast get very complicated with their state tax returns. But my partner is an ex-IRS agent. He's very good. His father owns a hobby shop. He knows the hobbies backwards and forwards. And together, our goal is for the money you earn to stay in your pocket, not to give it to the government. Nobody likes paying the government. I'm sure I'm forgetting some questions. Leave them in the comments. Send me an email. Have a happy Thanksgiving. And as always, keep collecting.